The rich don't think about money the same way you do. The difference between being a millionaire and a billionaire isn't just how much money you have, it is how you think about wealth, investing, and risk. In this video, I'm going to show you the 3 billionaire money secrets that can change the way you grow your wealth forever. By the end of this video, you're going to understand why billionaires never ever worry about money and how you can start applying these strategies yourself today. So let's talk about how billionaires view money differently. The first secret is that billionaires tend to focus on assets. The average person focuses on earning money. We all want to make as much money as we possibly can, but then they unfortunately focus on how to spend that money that they've earned. So they focus on earning and spending versus billionaires who focus on accumulating assets. And if you think about the kind of dilemmas that face the average person, they're typically thinking about where to take the next vacation, how much that might cost, which car to buy, how much bigger of a house should you buy next time. Those are all consumption-related activities. Those are things where we are looking at how much money we've earned and trying to figure out how best to spend it. When you look at billionaires, on the other hand, they're always thinking about what is my ROI or return on investment if I buy this? What is my opportunity cost if I don't buy it? Look, billionaires love accumulating assets that generate cash flow and they generate income. Look, when something's generating positive cash flow and it pays income, it pays interest, it pays dividends, it pays distributions, whatever it may be, the risk of that investment going to zero is much, much lower. That is a much more dependable asset that you can own to intelligently grow and compound your wealth over time. Now, according to Forbes, 90% of billionaire wealth is actually tied to assets, not salary and compensation. A great example would be Jeff Bezos, the third wealthiest guy in the world. His salary in 2022, $81,840. What is his total net worth today? $231 billion, which again makes him number 3 in the world, and his total stock value based on his March 2025 holdings is worth $155 billion according to the Bloomberg Billionaire Index. So look, if you want to build wealth, you have to stop merely trading your time for money, and you need to begin accumulating assets. The second secret is billionaires play the long game. They play long ball. Average investors, unfortunately, tend to panic over short-term losses. Billionaires, on the other hand, they use market crashes as buying opportunities. They approach them opportunistically. They see value. They capitalize on opportunity, and that's what makes them great. That's what helps them to drive the compounding of their wealth. Warren Buffett put billions to work during the Great Recession of 2008 when everybody was terrified. As an example, he bought $5 billion of Goldman Sachs stock in 2008, made over $3 billion in profit, which was a 60% return. Now you fast forward to today, Warren Buffett is currently sitting on $334 billion of cash, waiting for companies that he wants to buy. The secret? Billionaires don't chase quick wins. They focus on compounding wealth over decades. All right, before we get into number 3, make sure you hit the like button, subscribe to the channel, hit the notification bell. If this content is striking a nerve, this particular video, make sure you watch one of our other videos when this is over, How the Ultra Rich Invest. I think you'll like it. And on to the third secret, billionaires use debt. They do use debt, but they use it to build wealth, not to consume. Now, if you think about the average person, many of us, we use debt to finance liabilities, cars, vacations, to the point where we now collectively have $1.2 trillion in credit card debt, and we have roughly another $700 billion in buy now, pay later debt. Again, we are financing our ability to enjoy life today. Billionaires don't do that. What they do, on the other hand, is they use debt to acquire income-producing assets. So look, using debt to fund your lifestyle, bad. Using debt in a smart and prudent manner to build wealth and compound wealth over time, good. An example would be Elon Musk. He used his Tesla shares, borrowed against those shares, paid an interest rate to access that money without selling the shares in order for him to buy Twitter. And what that did for him is it helped him to avoid having to sell his Tesla stock and then having to pay a capital gains tax where he would have been left with 75-ish cents on the dollar. Another example, Sam Zell used 75% debt financing to build a $5.8 billion empire. Now, this is a guy who borrowed at 4 to 5% interest to buy properties yielding 8 to 10%, according to Forbes. That is what we call positive arbitrage, borrowing at a rate only to then realize a higher rate in return. So if billionaires think about money completely differently, how can you apply this to your own wealth strategy? How can you adopt the billionaire mind? Well, the first thing you can do is you can stop trading your time for money and you can begin owning assets. It could be stocks, it could be real estate, could be private equity, private businesses, franchises. If we're talking about stocks, we want to focus on companies that are growing market share and they have pricing power, which means that they can continue to increase their prices over time because there's high demand for their products. Within real estate, we want to look for properties that are in growing markets, not shrinking markets, that have positive cash flow. And if we're talking about businesses, we want to invest in companies that can scale without requiring a complete overhaul of the company. Back to Sam Zell again. So look, he started with one apartment building. He reinvested 100% of its profits for 10 straight years. And he built Equity Residential, which is now worth billions, according to his autobiography. On to step 2. Use market volatility to your advantage. Be opportunistic. We need to begin thinking in years and decades, not months. I mean, think about it this way. If a stock you love, that you are confident in, you love the prospects of this company over the course of the next 3 to 5 years and beyond, if that stock is down 20, 30, 40%, what changed about its potential? Nothing. It's still going to do probably everything you expected it to do. The only thing that changed is the price is just lower. And smart people buy things they like when they're on sale. Good example would be Amazon. The stock fell 90% in the early 2000s. Long-term investors, however, made a ton of money. They made fortunes. If you invested $10,000 in Amazon's IPO in 1997, you've got over $22 million today. However, you had several 20 to 80% drops along the way. As long as those didn't freak you out and you kept your stock, you are very happy today. And the third step is to just use debt the right way. Like I mentioned, good debt would be buying income-producing assets. Bad debt is funding a lifestyle you can't afford. So when we talk about ways to utilize debt to buy income-producing assets, a good example would be taking out a 4 or 5% mortgage on a property that generates an 8% yield. That's phenomenal growth. That makes sense. That's good debt. Now, pivoting over to bad debt, look, using credit card at 18, 19, 20% interest for vacations, dining out, that's just not a smart way to live your life. It's going to cost you too much in interest. Auto loans, I mean, autos are one of those things where they depreciate incredibly rapidly as soon as you drive them off the lot. So taking on debt to buy assets that are actually coming down in value or have no value at all, that is going to be a bad use of debt. The bottom line, billionaires don't get rich by accident. They follow a strategy. The good news is that you can adopt these same exact principles starting today. If you want to start thinking and investing like the ultra wealthy, like billionaires, hit that subscribe button, like this video, and tell me in the comments, what is one billionaire money habit that you want to start using today? In the meantime, you can find me on X at Mark Tepper, SWP.